We should start it now, ma'am.
Yes, sir.
Uh, Good afternoon, everyone. Today we are conducting a webinar on the topic GST challenges in complying with self-invoicing and RCM. I am Pradeep Kumar Jhajaria, Assistant Director in DGTS Mumbai Zonal Unit. And though the moderation was to be done by our Joint Director Sri Joseph G. Patil, but because he is down with flu, so I'll be shouldering this responsibility. And with the kind permission of our Principal ADG Sir, Sri Sumit Kumar, we shall begin today's webinar. At the start, I would like to welcome all the participants and departmental officers on the behalf of Director General of Taxpayer Services, Mumbai Zonal Unit. I take this opportunity to welcome our Principal Additional Director General Sir, Sri Sumit Kumar Sir, who is an IRS of 1994 batch. Sir, I request you to please deliver the welcome address.
Thank you, Mr. Jhajaria. Very good afternoon to all the participants and attendees. I especially want to thank Ms. Uma here, Partner Indirect Tax, Ernst & Young, and Mr. Sandeep T. Jain, President, Bombay Metal Exchange, and all my colleagues and participants. I'm honored to extend a warm welcome to all to attend this webinar. I greatly appreciate the support and cooperation extended by Ernst & Young and Bombay Metal Exchange. These bodies have played a pivotal role in accelerating genuine grievance redressal at appropriate levels, enabling government and CBIC to address and redress the problems. The role of trade association in stimulating, shaping, and scaling up Indian economy and to assist CBIC in dispute resolution is undisputable. I'll also like to mention that we, the host, are part of Central Board of Indirect Taxes and Customs, which is part of Ministry of Finance, Department of Revenue. DGTS has its headquarters in New Delhi. It's a part of CBIC. And we have got 6 zonal units. The zonal unit I had, Mumbai Zonal Unit, state of Maharashtra and Goa. This wing of CBIC is set up with the mandate to reach all the taxpayers to create awareness about the laws, the rules, the procedures, to find out about the grievances, if any, and to help in clarifying the doubts arising in following the changing the rules and regulations. It is the constant endeavor of CBIC and DGTS to bring in current and relevant topics, thereby facilitating the trade importers, exporters in enriching their knowledge and understanding of the law, enabling all the stakeholders to become aware of the changes in procedure and the law, which in turn enhances the compliance. Several need-based webinars have already been conducted in the past by the Mumbai Zonal Unit. And the topics have been decided after taking inputs from the trade and industry. Today's webinar is one such event on a very important topic of GST challenges in complying with self-invoicing and RCM. The Goods and Service Tax Framework has introduced various compliance requirements for businesses, particularly concerning self-invoicing and the reverse charge mechanism services. While these provisions aim to streamline tax process, enhance revenue collection by making compliance easy for taxpayers, they also present potential challenges. Self-invoicing is to be done when a buyer purchases from an unregistered supplier or when the buyer purchases certain notified goods and services, regardless of the supplier's registration status. And such purchase of goods or services or both fall under reverse charge. And this is because the supplier cannot issue a GST compliant invoice to the buyer. And thus buyer becomes liable to pay taxes on their behalf. However, compliance challenges arise in ensuring that self-generated invoices meet all the statutory GST requirements, including proper documentation, accurate tax calculation, and adherence to the prescribed statutory formats. Under the reverse charge mechanism RCM framework, the recipient of goods and services is responsible for paying the GST instead of the supplier. This shifts the compliance burden onto recipient, and this is the reason why we are having this particular webinar. Today's speaker is Shri Vikram Kulkarni, who has been in the department and now in the industry. He's a partner in indirect tax practice at BDO in India. He has 30 years of professional experience in the indirect tax domain. Prior to joining BDO in India, he worked as a departmental officer in Customs and Central Excise for more than 2 decades. He was facilitated with a certificate of appreciation for meritorious service on the occasion of Central Excise Day in 2015. He advises organizations with GST, customs, and foreign trade policy and other levies such as Central Excise and Service Tax. He also guides and handholds clients during the departmental audit investigations by various agencies. He is also visiting faculty in NASAN, National Academy of Indirect Taxes and Customs in Mumbai. He'll be discussing the topic at length and will be answering questions, if any, raised by the discussants and participants. So without any further delay, I request all the participants to make this a useful and helpful session. With these words, I welcome you all to this webinar, and over to you, Mr. Pratik Jailani. Thank you so much.
Thank you, sir. Thank you for your enriching words, sir. Now I would like to, before that, we in DGTS always strive to bring some panel members who can not only give us the insight on the topic selected for the day, but can also help us gauge the perception and appropriate feedback on the agendas of the taxpayers' needs, their expectations, and their constructive suggestions that can go as input to the policy frameworks. Today, we have 2 esteemed personalities as trade panelists. One is Miss Uma Iyer, and she is partner indirect tax Ernst & Young, and in the indirect tax and regulatory service practices. She is qualified chartered accountant in 2002 and also holds a master's degree in commerce from the Bombay University. She has more than 20 years of post-qualification experience with Ernst & Young India Indirect Taxes, assisted various multinational and domestic clients over a wide range of industries, especially oil and gas service providers, EPC contractors, shipping, aviation, and power sectors. Assisted in handling and managing assignments involving identification of indirect tax strategy and tax planning opportunities, tax advisory, tax reviews, and due diligence projects. She has also advised and led assignments involving various complex indirect tax matters, India entry and exit strategies, including structuring Indian operations from business, tax and regulatory perspectives, tax representation, litigation, and compliance services. Welcome, ma'am. And our another trade partner is Shri Sandeep T. Jain. Shri Jain is the president of Bombay Metal Exchange Limited, which is the apex association representing non-ferrous metals, trade and industry all over India. Shri Jain is also the MD of Laurel Wires Limited, manufacturers of bare and enameled copper wire in collaboration with TYPLAZ Australia. Now I take the opportunity to first invite Ms. Uma Iyer, partner indirect tax Ernst & Young in the indirect tax and regulatory service practices, to kindly address the participants. Ma'am, over to you, ma'am.
Thank you so much, sir. Thank you, the entire audience. And thank you, DGTS, for such a wonderful platform. I think the topic chosen is very relevant and important. And I think the key points will be covered during the course of the discussions. My suggestion, sir, would be that if at the end of the discussions, there are some additional aspects that we feel as panelists and otherwise need to be further brought forth to the audience, we will gladly do that. But I think we will first begin with the entire discussions, subject to your kind approval. And, we can take some of the questions or interpretation or issues during the course of the discussions, sir.
Thank you, ma'am. Thank you for your views. And certainly we will be having some questions and issues at the later part of our presentation. and Mr. Vikram Kulkarni himself will be satisfying the queries. Means that will either come on the chat box, or if somebody wants to raise the hand or can ask it directly. So Mr. Vikram Kulkarni will be addressing those also. Now I would like to invite Shri Sandeep T. Jain, President of Bombay Metal Exchange Limited (BME), to please address the participant and come up with his views.
Thank you, Mr. Jajaria. Hello and good afternoon, everyone. Shri Subit Kumarji, Principal ADG DGTS. Today's speaker, Shri Vikram Kulkarni, Superintendent CBIC, retired. Then Dr. Jhanjaria from DGS, Mrs. Uma Iyer, Partner Indirect Tax E&Y, respected dignitaries and esteemed friends from the trade and industry. I'm Sandeep Jain, President of Bombay Metal Exchange, the apex dynamic and recognized body of the non-ferrous metal trade and industry in India for over 90 years. Our exchange represents a broad spectrum of members, including MSMEs, recyclers, traders, and large-scale industries across the country. I deeply appreciate the initiative taken by the DGTS, Mumbai Zonal Unit, for organizing this insightful webinar on GST challenges and in complying with self-invoicing and RCM. Through this platform, I would also like to request DGTS Mumbai Unit to organize next webinar on GST search and rates. Non-ferrous metals industry, especially scrap consumers, have been victim of fake invoices very severely. So it's very urgent to know the solution and future action on the same. In fact, to give boost to circular economy, GST on metal scrap should be removed or RCM to be imposed on first stage to get the unorganized sector into the system. This move would undoubtedly bolster the Make in India initiative and ensure a level playing field for domestic manufacturers. So once again, thank you for giving me opportunity to speak today. So thank you very much.
Thank you, Sandeep Jainji. Now is time to come to the main part of the presentation. Shri Vikram Kulkarni ji, he has already been introduced by our principal ADG sir. So I will not go into that again. But he's having a vast knowledge as well as the long experience to deal with such matters. And I hope we will be having a very good presentation with all the insights on the nitty-gritties of the topic that we have selected today. And I request Shri Vikram Kulkarni to begin with his presentation. Vikram Kulkarni, sir.
Thank you so much, Dr. Jhajaria, sir. A very big thanks to DGTS, Sumit Kumar, sir, Principal ADG DGTS, for giving this opportunity to me to address this webinar. A very, very relevant and topical subject which has been picked up today. Glad to be associated on the platform with Sandeep Jainji and Uma Iyer ji, who will be sharing the dais with me today. And I'm sure the audience today will take a lot of experience and knowledge from today's webinar. So we have curated a presentation on this topic, GST challenges in complying with self-invoicing and reverse charge mechanism. In fact, what we have done is we will be starting with, we have curated it into various portions. In fact, there could be some people in the audience who may be knowing or may not be fully aware of the nuances of reverse charge mechanism, or RCM as we call it. So I'll try to cover that part of it. Then various aspects in the RCM, like time of supply, what are the services or supplies which are covered under RCM, what kind of documentation is covered, and then of course the challenges which are being faced by the industry in general in the RCM, and of course the clarifications, whatever has been issued over the period of time by the CBIC or the council. We'll be taking up that. I'm sure I'll try to make it as interesting and as possible for the audience. So to begin with, for the sake of brevity and for everybody's ease, what is reverse charge mechanism under GST? Now, apparently, we know that GST is a tax on the supplies, and usually it's the supplier of goods or services who's liable to pay tax under GST. However, there are certain specified cases wherein the liability to pay tax has been imposed on the recipient of the supply. Now you see imports, like historically we have been importing goods. Now the person who's exporting the goods into India, of course, is based outside India. But the person who is going to actually, receive those goods into India, that is the importer, pays whatever taxes are liable to be paid, like basic customs duty. And earlier it used to be CVD, the countervailing duty, or the parallel of the central excise, which was levied, or in today's parlance, the IGST along with that. That is paid by the importer of the goods. So yes, there has been a precedence on this aspect. But there are certain as far as goods is concerned, we know that they are liable to be, or the taxes are collected by the customs authorities. But then there are services as well, certain services on which reverse charge mechanism has been made applicable. So we'll discuss all that as we go through this presentation. So as we know that the recipient is liable to pay the tax as a recipient on whatever supply of goods or services instead of the supplier of such goods. Now, if we see that there are two types of scenarios under the reverse charge mechanism, as we see. One is based on the nature of supply or the supplier, right? What kind of supply it is. I mean, whether it's a particular type of service or particular type of goods. Now, those are specific categories on which it is decided whether it is liable to be covered under reverse charge mechanism or otherwise. The other part is specifically based on the supplies by unregistered person to a registered entity. I can see some hand raised. I guess what we'll do is, for the sake of convenience, we'll take all the Q&As after I finish the presentation. So if that is fine, you may please put your questions in the chat box, and so that the continuity is maintained and we can take up all the doubts post we have completed the presentation. So yeah, just to briefly touch on that, I mean, the other category is the unregistered person. If they are supplying any services or supplies to the registered person, some of them are covered. As we all know that there was initial confusion when the GST was introduced, and apparently there was a monetary limit imposed that anything which is any supply above 5,000 rupees will be liable to reverse charge from an unregistered person. But now that has been done away. In fact, it has been in abeyance. Now, one thing we need to know is that there is compulsory registration requirement on a person who is liable to pay GST under reverse charge mechanism. So anybody on him who's providing any outward supplies or anything, and if they are liable to pay under RCM, they are required to take compulsory registration, except the person who's only making supplies that attract 100% GST under RCM. So anybody who's providing services under RCM and is also a recipient of services under RCM, he need not get registered. So we'll move on to next. Just a simple flow chart as to how the RCM works. Under a normal charge, you see that the supplier of goods or services sells the goods or services to the recipient of goods. The recipient of the goods or services gives the consideration or pays the consideration along with the GST to the supplier, and the supplier in turn deposits the GST to the government. In the reverse charge, there is a slight change. Here, the supplier of goods provides the goods or services to the recipient of goods or services, and who in turn makes the payment of consideration of the goods or services so received by him. However, he is responsible to pay the GST to the government. So that's the difference of a normal charge or versus a reverse charge. Now, a very important aspect when we talk about reverse charge is the time of supply. As to what is the time of supply, as to when you should make the payment of GST under RCM. Now you see, again, I mean, if we talk about the time of supply of goods under RCM, then you have to consider earliest of the three events. Now, what are those events? The event is first the date of receipt of goods. Second is the date of payment made to the supplier. And third, the date immediately after 30 days from the date of issue of invoice by supplier. Now, these are the three events. Whatever occurs earlier, you have to make the payment towards that. That is in respect of goods. In respect of services, the earliest of the events, that is one, the date of payment, the date on which you make the payment to the supplier. Two, date immediately after 60 days from the date of issue of invoice by the supplier. Now, earlier, I mean, prior to the Finance Act number 2, 2024, only these two times of supply or events were there. A third event has now been introduced by this Finance Act, that is the Union Budget, which was recently announced, and that is the date of issue of invoice by the recipient. So, whatever event out of these three occurs, the time of supply occurs, and that is the time when you are required to discharge the GST under RCM. Now, just a quick look at what are those specified goods and services which are covered under RCM. As we discussed earlier, that there are two types of categories. We'll just have a look at what kind of categories have been notified for the purpose of GST under reverse charge mechanism. So, look, talking about goods, there are a few goods which have been covered. I mean, like cashew nuts, or BD wrappers of leaves, the tendo leaves, the tobacco leaves, the silk yarn, or supply of lottery, or used vehicles, which are seized and confiscated goods, old and used goods, waste and scrap, and priority sector lending certificate. I mean, these are some of the items or goods which are covered under the reverse charge mechanism. Now, as regards services, there is a whole bucket list of services which are covered under the reverse charge. Now you'll see on many of them, you must be aware also. One is the services by a goods transport agency, that is the GT as we call it. Then there are legal services, the services provided by an individual advocate or a firm of advocates, or services provided or agreed to be provided by an arbitral tribunal, or sponsorship services. Even services supplied by the central or state government or union territory or a local authority to any business entity. There are certain exclusions in that. Then there are, any services provided by the government, be the central or state or UT, by way of renting of immovable property to a registered person. Then services by way of renting of residential dwelling to a registered person, if it is provided to any registered person, then also the RCM triggers. And services supplied by any person by way of transfer of FSI, the floor space index. In this case, of course, the promoter of the project is liable to pay the tax. Then similarly, the long-term lease of land by any person also is covered under reverse charge mechanism. Services supplied by a director to a company or a body corporate of the said company. Okay, I mean, if there are directors in companies, and if they're providing any services on their individual capacity, then the company in which they are directors is liable to pay RCM. And services provided by an insurance agent to an insurance company. Then the services which are provided by a recovery agent to the banking company or a non-banking financial institution, or NBFC as we say. And similarly, the services by any author or a music composer or an artist, etc. They are covered under that. Supply of services by members of overseeing committee of RBI. Services supplied by the direct selling agents of the NBFCs. Then there are business facilitators to the banking companies. They are covered. Then by agents of business correspondent to the business correspondents, those are covered. Security services which are provided by by way of providing security personnel are covered under reverse charge mechanism. Now, any services supplied by any person located in a non-taxable territory to any person other than a non-taxable online recipient are also covered. Now, we have seen a lot of developments in this particular type of service because there was a lot of issues coming up, a lot of confusions going around. We'll be discussing those as we move on. So yes, these are some of the services which we discussed are covered under the reverse charge mechanism. Now as we move towards the challenges, the first step towards that is the documentation under RCM. Very important to know what all documentation is required under RCM. Now, first and foremost is self-invoicing. You see, anybody who's receiving services from a person who's not registered, or who's if you're liable to pay under under reverse charge mechanism, you are required to issue a self invoice. So especially those persons who are not registered under the GST. From those, if a registered person is receiving, a self invoice is required. Many a times people miss out on issuing this self invoice. In fact, self invoice is the proper document to avail the input tax credit of whatever GST has been paid for that towards that supply. And again, the rule 46 of the CDSC rules provides for what all should be included in the format of a self invoice. Now, there are various parameters which need to be included. Many times people tend to skip that or miss out on that, which creates issues at the time of audit or inspections by the authorities. A very important aspect in this, which I've highlighted, is the requirement of signature or digital signature of supplier or his authorized signatory. Now, this is something which is very peculiar. I would like to highlight that a self invoice is prepared by the recipient and not by the supplier. So, if I am the recipient, I am preparing the invoice as a recipient. Getting the signature or digital signature of the supplier or his authorized signatory can be a very big challenge to me. So, the logic behind this needs to be examined, or probably it needs to be brought out into the notice of the board, that it probably should carry the signatures of the person who is issuing the self invoice rather than the supplier. So, but again, this poses a challenge. If it is there in the law, it is there. Moving on, there is something called a payment voucher. Very common aspect. People probably usually are not aware, especially the small businesses, that whenever they are making payments under the RCM to the supplier of the services or supply the goods, they are required to prepare a payment voucher. And there is a format provided for the same under Rule 52. You need to incorporate those details into the payment voucher. And again, here there is a requirement of signature of the supplier or his authorized signatory, which can be a very big challenge because in case of large corporates, there could be multiple number of suppliers for whom they must be discharging GST under RCM and making payments to them. So keeping track of such suppliers, not only for the purpose of payment of GST, but also making payments to them and getting the signatures, could pose a huge challenge, I'm sure. And since it is there, it would definitely be picked up by the authorities during the course of audit. And if not anything, but it can always pose as a procedural lapse on the part of the concerned assessee. Now we come to few of the challenges. I'm sure you must have faced a number of challenges, and we'll be happy to hear them out. But what we could see, commonly in the trade and industry, what they have, or what it is being, challenged with or facing, and finding it difficult. We have discussed a few of them. Now, first and foremost is like it is expected from each registered person to know the transactions liable to reverse charge. Now, I just highlighted the transactions or the nature of suppliers who are covered under the reverse charge mechanism. I'm sure you may, after going through or hearing me out, you may not remember more than 6 or 7 out of them, because there are so many, and it's been so recent. So to remember all those suppliers who for whom you are required to pay under reverse charge can be a very challenging aspect, and particularly for those who are a one-man company, or very few people who take care of their tax and the compliances. So to keep a track of such things could be a challenging aspect for them. Then the parameters to determine the time at which GST is required to be paid under RCM can be very confusing. As I said, I discussed in the earlier slide, that there are various events which will determine the time of supply for GST. That is the time when you are required to pay the GST to the exchequer. Now, whether it is the date of making the payment, or whether it is the date of the invoice, or whether it is 30 days after the invoice, or whether it is after 60 days of the invoice, depending on the goods or services you are supplying, you have to determine that whichever is the earliest, that will be the time of supply. Now, keeping a track of that, in case you have multiple suppliers, again, would be a very difficult scenario. Now, another important aspect is value on which GST is required to be paid under reverse charge. See, when there is a consideration involved and there is no issue. The problem arises when there is no consideration, particularly in case of related parties. So we'll discuss that aspect as we move on. But yes, determining the value is a big challenge. Of course, the council and CBIC have come forward and they have issued and made the life much more easier by issuing a clarification on this aspect, which we'll be taking up. But yes, this is one. Another thing is how to determine the value of supplies received from overseas related party without consideration, especially those where full ITC is not available to the recipient. Now again, just a corollary to what we discussed in the point prior to this, that in case of related party transactions, the board has clarified that if the entity, the recipient entity is entitled for the full input tax credit, then whatever value is declared can be treated as the open market value. And in fact, if there is no consideration involved, then it can be treated as nil. The value can be treated as nil. But the question is, if the recipient is not entitled for the full input tax credit, they are also supplying exempt products, exempt supplies. In that case, they'll have to reverse the input tax credit and they are not entitled. In that case, to arrive at an open market value can pose a big challenge, especially in respect of those supplies where it is difficult. They're not common. I mean, if they are common and you have some scale to compare with or parallel to compare with, then it is fine. If it is not there, then it can become a thorough challenge. And again, it can vary from party to party, person to person. I mean, you may, for example, let's say the brand value. I mean, brand value could be something which it's anybody's guess. I mean, for a brand value of a well-known company may carry a much more value, but for a not so big company, probably that may not be so high. So to determine that could be a challenge not just for the taxpayer but also for the authorities. So this is a gray area. Another thing is when to avail the input tax credit of tax paid under reverse charge. I mean, what's the time when you should avail? Whether if you have paid the RCM tax GST in a particular month, whether you should avail it in the same month or the next month. Actually, it is in the same month. You pay it and you take the credit. But many people get confused into that. That if I pay in this month, maybe I'll have to take it next month, something like that. Now, what type of supplies on which GST is paid under RCM would be reflected in GSTR 2B? Or if there are certain suppliers who are registered with the department, and they will reflect those supplies in their GSTR 1, which will then be reflected in your GSTR 2B. So, what are those supplies? Which will, if they appear in your GSTR 2B, you are generally aware that yes, it's coming in and I have to pay GST on that. What about those who are not registered? They will not be reporting it under GSTR 1 because they won't be filing any GSTR 1. So they won't come in your GSTR 2B. So there is always a matching which you need to carry out at the back end at your, in your worksheets. Determination of the appropriate rate of GST to be paid under reverse charge. There are various types of supplies attracting different types or different rates of GST. To keep a track of that. I remember having come across one of my taxpayers. They were availing GTA services and they were discharging GST at the rate of 18%, whereas they were required to pay at the rate of 5%, right, under RCM, post the changes. So even keeping track of that becomes a challenge for many entities, and to keep a track as to whenever it changes, you need to change your outward liability, whatever you're paying. Similarly, determination of rate of tax to be paid by the RCM, under RCM for taxpayers under composition scheme. Now you see any composition taxpayer is required. He's usually a small businessman, right? I mean, he's required to take composition scheme registration and pay a certain amount, and that's it. How will that person know that if he's availing, any supplies or receiving any supplies from a person on those supplies, he's required to pay GST under RCM? He won't be aware, and therefore he misses out on that. A composition scheme taxpayer is required to pay GST under RCM if applicable on the appropriate rate of GST, whatever type of nature of supply is receiving. Most common could be a GTA or maybe a lawyer, but he has to pay GST as under RCM at that rate. So just because he's under composition scheme will not absolve him of not paying GST under RCM. A very important aspect which could be a very big challenge for many is to reverse the ITC under Rule 42. Now, if you're supplying exempt as well as taxable supplies, and you are paying under under forward charge as well as under reverse charge, you are availing credit of ITC under reverse charge as well. You are required to reverse the input tax credit proportionately. So that thing, calculation of RCM to be reversed, is something which is very important. Even though you are paid in cash, we all know that GST under RCM is required to be paid from cash ledger. You cannot use your input tax credit to discharge that liability. So once you have paid in cash, on the normal course, you can avail the credit. But if you're providing supplies which are exempt, you are required to reverse proportionate credit. That is important. Many people might miss out on that. And as we discussed, the documentation which needs to be done for the reverse charge, be it invoice, self-invoice, or the payment voucher. There is lack of awareness. People miss out on that, and that can pose a very big challenge. Again, there is a reporting requirement in GSTR1 for self-invoices as well as the payment voucher, right? And this reporting, I mean, you have to give the serial numbers of the documents issued in a particular month. That includes self-invoices, that includes payment vouchers, apart from your outward supply invoices, etc., or credit notes. This is something which people may miss out on. And then obtaining signatures, as I mentioned earlier, of the supplier on the self-invoice or a payment voucher can be a challenge. It's a requirement, but it's a challenge. We need to see, I mean, how this develops going forward. Going forward, some specific challenges. I mean, supplies which are attracting GST under reverse charge from registered vendors are reported by such registered suppliers in their GSTR1, and therefore they get reflected into the recipient's GSTR2B. Here it is fine. But the supplies which attract GST under reverse charge from unregistered vendors, they are nowhere reported by such people who are not registered, and therefore they are not part of the recipient's GSTR2B. Now, what happens is when the recipient, when he's reporting his outward liability under GSTR3B, he declares his GST under RCM from both the type of supplies, that is, those availed from the registered person as well as from the unregistered person suppliers. So what happens is he's reporting the liability correctly, and while when they avail the ITC of this supply, input tax credit on the RCM from the registered and as well as unregistered supplies in the 3B, there is a delta, there is a difference between the number which is appearing in the GSTR2B and what they're reporting. For example, let's assume that the input tax credit, the total GSTR liability is, let's say, 100 rupees, which includes registered as well as unregistered. Out of that 100 rupees, let's say 80 rupees pertains to those registered suppliers, which is reflected in 2B, and 20 rupees pertains to unregistered suppliers, which is not reflected in 2B. So what you do is you pay 100 rupees, and of course you're entitled for the input tax credit of entire 100 rupees. But once you show 100 in your ITC credit, the system shows a pop-up. It shows that there is a difference of 20 because the GSTR2B shows 80, whereas you have taken 100. Now this pop-up is basically, if you can see from in my system, I've shown this, the error which actually comes, when there is this kind of difference. So apparently there is no issue as such, but the problem is that the authorities at the time of audit, when they come, they will definitely see that there is a difference, there is a variation, and therefore you need to keep a complete backup of all these data. I mean, the registered as well as unregistered and the difference, so that you are able to satisfy those queries. So this pop-up actually should not be there, but then it is coming as of today, and it can be a challenge for the taxpayers that though they are discharging correctly, but since it does not match with the details which are available in the 2B, therefore this error comes in. So this needs some sort of a correction. Moving on. Now this particularly pertains to the SEZ units or SEZ unit developers. Now what happens is SEZ units or developers receive supplies which attract GST under RCM from suppliers which are located in the DT. Now the question is whether SEZ units or developers are liable to GST under RCM or exempt from discharging GST on such supplies. You see, in the normal course, any supplier from DTA to SEZ avails the benefit of zero rating. It's only the question of supplies which attract GST under reverse charge mechanism, where the recipient is an SEZ unit or a developer. Whether the developer or the unit is required to pay the GST under RCM or whether they are exempt. Now here what happened was a notification was issued in 2017 which grants exemption from IGST to services imported by a unit or a developer in SEZ for authorized operation. Now mind you, the word is imported by a unit. Now IGST Act defines import of services as the supply of any service where the supplier of services is located outside India, the recipient of services is located in India, within India, and the place of supply of services is also in India. This is import as per the IGST Act. And SEZ Act defines import as bringing goods or receiving services in an SEZ by a unit or developer from a place outside India by land, sea, or air, or by any other mode, whether physical or otherwise. Now, in both these cases, you see there is an emphasis on supplies received from outside India. Now, the issue which we are talking about here is the supplies are received from within India because it's a DTS supplier and the liability is under RCM on the recipient. Now, in this case, what should be done by an SEZ unit? Right? Because DTS supply does not fall into the category of an importer or other import, the definition of import. However, there has been an AR in Gujarat recently which ruled that SEZ units or developers are not required to discharge GST under RCM subject to them furnishing LUT or a bond. Now, this has come by way of an AR, but again, that is case specific. What needs to be seen here is that this is a gap. It's an open to interpretation kind of scene. Some people may see it that yes, it's not covered in any of the exemption and therefore the unit in SEZ is required to pay. There are different stands which have been taken by SEZ units basis their understanding. Some are paying GST, some are not paying. But again, it gives a room for a lot of interpretation and litigation. So this seems to be an issue which needs to be addressed and by the proper forum, and a proper solution should be given or carved out. We'll just move on to some clarifications and the amendments in the which were introduced into the budget. We'll discuss them. First and foremost is the there was a clarification which was issued, white circular issued on 26 June 2024. There were a lot of circulars issued post the 53rd Council meeting, and this circular addressed a very major challenge which was faced by the industry. It was about the taxability of services between distinct persons, or those who are where the supplier of the services is based outside India and the recipient is based in India, that is import of services. Now, apparently, a similar issue cropped up earlier, wherein it was between the distinct entities like HO or branch offices within India, but in different states. So the CBIC had clarified about them, about this particular aspect, that how to work out the value and how it should be treated for the purpose of tax. Now the same was made applicable for the imports as well. So if there is an import of services from an entity, related entity which is based out of India, and the recipient is in India, then there are various challenges which I discussed a little while ago as well. There may be consideration involved, there may not be a consideration involved, and what should be the value? How should we treat it for the purpose of GST under RCM? Now here what has happened is we can divide it under broadly 3 categories. or rather two categories. One where ITC, full ITC is available, and where full ITC is not available. Now, if there is consideration involved, I mean, where you are making payment to the provider of service or supply, and if you are entitled for full ITC input tax credit, then value declared in invoice will be the proper value. However, if no ITC is available, not full ITC is not available, then the open market value would be the the value for the purpose of discharging GST. Now, in case of there is an entry which is recorded in the books by the Indian recipient, then again the same theory goes. The full ITC is available, the value which has been recorded. If it is not, then the open market value. The question, and the more larger one which even still remains, is about where there is no consideration involved. It's like you're not paying anything, no invoice has been raised, but the services or supplies have been received. In that case, if full ITC is available, then even no money has been paid, or there is no value, then it will be treated as nil. That is what the board has clarified. The value will be taken as nil, and that's it. The question is, if full ITC is not available, I mean, if you're supplying taxable as well as exempt supplies, then you're not entitled for the full ITC. Then you have to arrive at the open market value, which can be a very big challenge to arrive. So you can take any value, but that should fill into the parameters of the open market value definition. And this could be a challenge for both department as well as to the taxpayer. This issue needs to be addressed, I guess, and something needs to be brought out on this aspect as well. Though the board has clarified, but this aspect, the little one, has still remained. Moving on to another amendment is about self-invoicing. Now, as I mentioned earlier, that a third event has been added to the self-invoice, like after the date of payment and the 60 days from the date of invoice, they have inserted another event, and that is date of issue of invoice by the recipient. This was not there earlier. Now it has been introduced. Now, again, a very important thing, presently there is no specific time limit prescribed for issuance of self-invoice. I mean, for example, if you receive some supply in, let's say, 2017, you issue an invoice in 2018, 2019, I mean, you were able to, avail the credit ITC of that. There was no time limit. You could issue and you could take the credit. I mean, Section 31(3)(f) has now been, amended to take care of this aspect, and it says that the time limit for issuance of invoice by the recipient in case of RCM supplies will be prescribed. So earlier there was this gap, there was no time limit prescribed. Now they have introduced this thing, and the board will come out with some sort of a notification on this to prescribe the time limit. So you cannot perennially sit and then one fine day you issue a self invoice and avail the input tax credit. That probably may go off. Again, there was no restriction to claim the ITC. The ITC of GST paid pursuant to demands, fraud, etc. I mean, that's one area which has again remained a open-ended one. That if there is no restriction to claim ITC, so anything which has been paid after detection by the department, etc. It will not be restricted from the FY 24-25 onwards. So you pay the GST at that point of time and you avail the input tax credit. But again, we need to see how this works. If we read it along with the earlier provision, which I just mentioned about the time limit being prescribed. So presently, how it stands is no time limit has been prescribed so far, and for FY 24-25 onwards, there is no restriction on availing the input tax credit, even if it is paid in as a pursuance to some demand or show cause notice, which even alleges, suppression of tax. This will be interesting to see as we move on. Then on 23rd August, recently, the GSTN has introduced a new functionality about the ITC, RCM ITC liability statement. Now, basically, this will be a ledger which will, enable, you to see the RCM transactions in a separate statement, wherein you can actually keep a track on your liability and the ITC which is you are entitled to. A separate statement to take care of that. Now again, it will be applicable for those monthly filers from the month of August onwards. The return of August will be filing will be applicable from them, and for those quarterly filers, it will be applicable from the September quarter onwards. One important thing which is to be remembered in this that if somebody has paid some RCM liability in excess and have not availed the input tax credit in their returns, this will be an opportunity for them to declare. It's a one-time kind of opportunity to declare the opening balance. And if they have availed excess and they are required to reverse that, again they'll have to show it as a negative one, and this is a one-time kind of opportunity. Till 31st of October, you can declare this opening balance if you have missed out. And of course, you can amend this a maximum of 3 times till 30th of November. You can rectify if there is some error in this. But you'll have to remember that this functionality, especially for reverse charge mechanism input tax credit, has been introduced in GST portal, and people can make use of this facility. Now, just to conclude, when we see that there has been a lot of issues, lot of notices have been flowing around on the reverse charge issue itself. Very recently, we all heard in news that a very big IT major was served with a very huge demand notice, again on the aspect of RCM. In fact, prior to that, we have seen the cases of, where the Supreme Court had stepped in and given out the judgments in the cases of, let's say, Mohit Minerals, and even the case of Northern Operating Systems. Now, these were cases where there were certain gray areas which were addressed by the Honorable Supreme Court, and thereafter the board proactively came forward and issued clarifications maybe in the form of exemptions, like in the case of Mohit Minerals, or some clarifications to take care of, like for example, for Northern Operating Systems, the manpower supply issue. So they came forward and the issues were addressed. So what we see is that yes, GST law is comparatively a new law. It has matured over the years, but still there are gray areas which still exist. The board is proactively trying to plug those gaps. The council has been proactive in coming out with clarifications and issuing them and seeing to it that the trade is not inconvenienced. But as we discussed, there are certain issues which are still remaining there. I'm sure they'll be taken or addressed to in the due course. But as a taxpayer, it will be a responsibility to keep a track of these finer nuances that at least on the compliances front or record keeping front, there is no way where we are found on the wrong foot by the authorities. We are required to stay compliant, because after all, reverse charge mechanism is something where you are required to pay and then avail the credit. But you need to keep a track of things so that procedurally you are generally covered. So yeah, this is from my end, and with this I conclude my presentation. Over to you, sir.
Thank you, Kulkarni sir. Thank you very much. And this was really very nicely prepared and elaborate and excellent presentation, throwing light on the final aspects of GST challenges in complying with self-invoicing and RCM. And I personally found the sections on challenges was so nicely designed that it took care of all the practical difficulties of all sort of taxpayers, from companies in domestic tariff area as well as in SAES area. And as you have already also dealt with, means some very new recent developments like circular number 210 of 2024, which came just in June this year, and which dealt with the services and value of supplies from foreign supplies and also from related foreign counterparts, and the introduction of RCM and ITC liabilities on GST portal, via an update on 23rd August 2024. Thank you, sir, for such elaborate and means very up to date recent inclusions in your presentation. And I have not seen any queries or questions coming on. Maybe credit goes to this good presentation. So I don't see any query there in chat box. So now we move on to almost the last part of this presentation. As we have come to the end of last part, I would like to, with the kind permission of Principal ADG sir, before concluding it, I would like to present the vote of thanks to panel members as well as sir. Your kind permission, sir.
Yes, Mr. Jajaria, I just want to make one point. We are planning other seminars and all. We would greatly appreciate input from the taxpayers and taxpayer intermediaries who can help us identify these subjects. We will also very much appreciate if issues relating to grievances, if any, are brought to our notice. We are presently in the process of devising a scientific method for collecting this in our zone, that is Maharashtra and Goa. Any inputs are greatly appreciated. We would also try and set up a system whereby all taxpayers from micro, small, medium enterprises to the large units, as also lawyers, chartered accountant, GST practitioners, and also in-house staff can feel free to address us, and they can also suggest the areas where we can help them. Taxpayer education, advanced redressal, dealing with the media, etc., are the work given to us by Government of India, and CBIC is very desirous of involving everybody in to ensure that pain points, if any, are immediately identified. We can then bring it to the notice of the policy section, and hopefully, if there's something which we feel can be done at the field level, we can also advise the field formations accordingly. So thank you so much. I greatly appreciate all the help provided by our partners, and we look forward to even greater participation and attendance in our future programs. Thank you, sir. Thank you so much.
Thank you, sir. Thank you very much. And now,
Thank you.
on behalf of DGTS Mumbai Zonal Unit, I would like to extend the vote of thanks. First of all, on behalf of our team, and I extend my sincere thanks to Principal ADG Sir Sumit Kumar, who has always been very encouraging and giving us all the guidance and ideas on how to conduct these webinars. And his ideas and broad vision has always been such a big help. Thank you, sir, for all your support and guidance, sir. It was a pleasure to have the two eminent trade panelists today, and my special thanks to Miss Uma Iyer and Shri Sandeep T. Jain for sparing their valuable time and participating in this webinar. It was really very nice to have your views on this topic, and we would love to have you further also in our future endeavors and programs that we will be conducting. Your input, your ideas on any of the topics are always welcome. My heartfelt thanks and gratitude to Sri Kulkarni ji, our speaker and presenter of the day, for delivering such a brilliant presentation. It was really an elaborate and insightful presentation, and we hope that the participants must have benefited from this session. Now it is time to wind up the proceedings. With the kind permission of Principal ADG sir, I would like to bring this session to end, and thank you all for making this webinar a success. Thank you very much.